every single ecosystem's native token, like the gas token, Sol for Solana, ETH for Ethereum, etc., as the base quote asset effectively against every token that's created. And on Hyperliquid, that flow is not there yet. There's a lot more friction involved. Like imagine, yes, there was a ton of wealth printed with hype, but the problem is people need to realize that wealth first before they go into any other spot token.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today I'm joined by Tolks, Max, and Omnia to talk about what's happening in the markets with probably a specific focus on Hyperliquid. Before we get started, Talks people already know about you. Max, Omnia, do you guys want to give a short introduction of what you guys do, who you are, a little background information?
Yeah, so I'm a DeFi contributor and Hyperliquid community advocate. It's probably the simplest way of putting it at the moment. I lead growth at Liquidity, specifically with the V2 stablecoin that's dropping imminently. And then on the Hyperliquid front, I've been helping onboard new teams to the ecosystem for the past few months via a syndicate, club, whatever you want to call it, of Hyperliquid power users, and getting builders over the chasm, so to speak.
Very cool.
Yeah, nice. Myself, been in the space for quite some time. Formerly worked for quite a few interesting DeFi protocols, and yeah, been on Hyperliquid since very early 2023. Hence meeting Max not long after. And yeah, most recently founding contributor to Kinetiq, which is powering liquid staking on Hyperliquid, which, yeah, some may or may not know about, but yeah, happy to chat more about that at some point. But anyway, yeah, that's me in a nutshell.
Fantastic. We'll talk a bit about, I want to talk about both HyperActive and Kinetiq a bit later as well. But early 2023 is kind of ridiculous. Like joining.
Total accident, by the way.
Yeah, how did it happen?
Yeah, I basically, my co-founder sent a podcast that Jeff was actually on called Flirting with Models. I could actually send you the link. It's pretty great. And that I was like, well, it was a really boring time in the market actually. So May 2023 to be specific, is when I actually started trading on Hyperliquid a couple weeks after finding out about it. And yeah, honestly, like I remember thinking to myself, I was like, damn, it's been a while since I joined a Discord. Like it was literally that time in the market. I was like, oh fuck. Like so anyway, I joined and I was not a perp retard back then, but yeah, I very quickly became one. Yeah, with no expectations, funny enough. And yeah, like it was pretty interesting to say the least. And in other words, like I think very few people believe when Jeff says stuff like, the scope has 100x like several times. And I think it's pretty crazy because the Hyperliquid Discord and the Hyperliquid scope at that time was like so bare compared to what it is now. So anyway, yeah, without chewing everyone's ear off, yeah, that's how I came across it.
Very cool. And I guess I want to ask a bit about that, and then we can get into, I guess, market stuff, and then we'll do bigger Hyperliquid. But Max, Omnia, you guys are both Talks. I don't know when you joined Hyperliquid, like when you started using it, but I assume both Max and Omnia started using it earlier than us. So that like idea of,
That's a safe assumption, I think. I was early enough, but not out in the forefront.
No, that's fair. Me too. I would say I was early enough, but not like 2023. Well, maybe late 2023. I need to check. But how has it like shifted? I mean, you guys have seen the Discord and the team say, actually, we're not going to do just perps. We're going to go into the L1. And then they assumably have like done more and more. What has that like been like? Or do you have any comments around that in general?
I got involved back in December of 23. And I would say at the time it was very much a platform for if DEX perp traders, relatively small community. And when I think about the growth since then, I think it's been most pronounced with two extra phases there, right? So in April of 24, right, was when spot trading became possible on the Hyperliquid L1. And that obviously is a different user profile than perps traders. That was more aligned with, I guess, how I interact with like on-chain stuff. I'm not much of a perps trader myself, to be honest. And I would say that initially brought in quite a chunk of interest, right? Because everyone that had earned points up until that point received per. And then new spot deployments started rolling out later in May. And I think by the time summer rolled around, right, there was like a core group of 50 to 100 people regularly trading spot on chain. It was still quite small, aside from a bit of a mania around July. And yeah, it definitely, felt like a ghost town later in the summer, early in the fall. I think, we were all calling each other bozos for not catching an
Still
exit
are.
bump, or still are. What I would add to all of that is, in some of the, just conversations I have with regards to like hyperactive and just getting to learn more about who's actually in this ecosystem, there was kind of a parallel development to all of this, which was just the kind of deployment of more sophisticated capital as well. So like I'm aware of like, TradFi prop shops that started in February of 2024, starting to use the Perps product in particular. Some even dabbled very, very small amounts in the spot markets over the summer too. And so I think that's kind of, a bit of a story you don't necessarily see just from crypto Twitter alone, right? But it's, yeah, the influx of more than just retail liquidity is definitely, a factor here. It's not just all retail, aping against each other.
Yeah, seconding that for sure. The spot market, I mean, just to go into where maybe there was a particular click for me was like the introduction of the spot markets. Obviously, per was cool, but like even myself at the time, funny enough, like I hadn't even developed like any sort of material exposure in the form of points until after the spot markets went live, where that was where the real, I guess you could say, um, excitement kind of ramped up to a ridiculous multiple compared to what it was before. And not just because of the fact that there were spot markets, but because of like what came with that, right? Like the fact that there was the initial introduction of Hyper BFT and how quickly it was shipped following the announcement, right? Like um, usually these things are discussed like months, if not quarters in advance, and and then you get some sort of like bots to roll out, but it literally came like significantly less than a month before it was actually discussed, which just kind of displays the rate at which the team ships. Um, and that alone was enough to be like, yeah, like pretty much do not focus on anything else except this because it you don't get this. I mean, I literally couldn't think of any other time that something like this had existed and just removed all potential biases and thought about like, oh, am I like where is this wrong? And I don't know, I couldn't find, kind of like the Van Eck dude saying like we are right, the shills are wrong,
It's an
So
L3. It's an L3.
yeah, it's obviously an L3, right? Without proofs to arbitrage. But anyway, so yeah, that was very interesting in terms of like maybe a turning point, if that even answers the question as to like where things started to really click even further. Um, and obviously on top of the fact that there was like I similar to Max, I'm not a perps trader at all. I LARP as one on PvP, as many may know now. But yeah, so I have been embarrassingly active there. But yeah, otherwise, the spot markets have been very, very interesting. And I think like one of the craziest things that I don't think I've ever said publicly is that you were quite like, and this was an opportunity that most people, like by most, I mean like literally like 99.8 or 9% of the market did not see that you were effectively like towards the tail end of the Hyperliquid kind of points program. You were effectively paid like gorillions of dollars, literally, to just trade meme coins, and like people did not understand this. So there was true material edge in doing that. And anyway, without rambling on, that was a very exciting time, and still is. And seeing now, like obviously the AI craze come to Hyperliquid and whatnot, like yeah, it's very cool to see. Like it's currently not the whole general purpose smart contract platform that people are obviously trying to point out, but currently it's like an insanely advanced, extremely performant exchange with a native spot token listing component, which already starts to kind of break into the monopoly of like centralized exchange spot token listings. And then what it will be very soon is the like all of those things I just mentioned on top of like an extremely composable EVM layer aside, right? So it's going to be very cool. It's kind of, in our opinion, obviously against extremely biased, saying this is going to make like the Binance to BSC relationship slash Coinbase and Base relationship look like absolute child's play, because they're operating on very different, boundaries. And yeah, I'll stop there.
All right, fantastic. Kind of ran over the whole Hyperliquid bull section as well, but
you can't contain it.
It was
you
expected.
Can't contain it.
It was expected, right? Like,
yeah. No, I mean, what you're talking about with the launch of spot markets, though, like, I mean, sometimes, and you mentioned earlier, like, you're early enough to a thing, and you're kind of talking in your head, like, am I wrong here? Like, am I a bozo? Am I wasting all my time? And for me, like, the parallels just to Solana, like, it's insane because you can go back, 2 years ago, and I felt that way about Solana, and then it was the Jito airdrop. Really, that kind of, it was just like, oh shit, like actually all of this is real, like, and sometimes it takes a launch of, whether it's an airdrop or volumes going up or the spot market, and the spot market coincides with the perp volume, and then you start looking at the volume numbers and you're like, oh shit, there's something here. Like a lot of times, being early can almost be a fault in a way because you don't realize exactly what the grand vision could be and what can be accomplished, and it takes a launch of something like the spot market to be like, okay, yeah, there is actually something here, and we're onto something here, and it just kind of, I mean, it just spirals your conviction even more, which can be a good or a bad thing. But obviously, for you guys, it's been an incredible journey.
Tolks, with regard to, because we were talking about this a bit earlier, do you think, in my mind, Hyperliquid and potentially Base are the only like real competitors to Solana? And you were talking a bit about like how, I don't know, Solana doesn't look so great right now. Especially like the spot, like on-chain trading on Solana has just been so bad. Except for like one coin today, which is large language model. I don't know if you guys saw that. It was really fun. But,
no, jeez.
Talks, what do you think?
I think it's difficult. I mean, I remember when we were talking to, I think it was Kez a couple months ago before Hype launched, and just talking about price targets and for Hype. And I say it's difficult in the fact that, yeah, it can be a competitor, but a lot of things in crypto move in unison, and they move off of relative basis. And that's why I was so excited about Hype, because, I mean, partially because of the product, but also partially because of the way Sui was performing, because that just creates an upper bound on the relative valuations. And like I said, so much in crypto relies on those relative valuations. It's the same thing with, going back to Sol versus ETH, and why I was so excited about Sol is because you could look at certain metrics and they're comparable to ETH, and ETH's valuation is at X and Sol's at Y, and it's underpriced by Z. And so there becomes a target in a way. So yeah, I mean, I do think Hyperliquid, Base, Sol are, and obviously, ETH mainnet a little bit, I guess, but those are the main four ecosystems that I would definitely be focused on. And I mean, we'll see with the Hyper EVM launch, kind of what that does for the ecosystem. I'm pretty excited about that. But yeah, I mean, I don't really have any interest in putting any attention anywhere else. I mean, even like recently with the Phantom rebrand to Sonic, and you saw kind of how that PA dissolved, and nobody really, there's nothing really going on there. And a lot of times, CT and these narratives get spun up about how this is bullish, but you can just look at, again, go back to the volumes, go back to the metrics, go back to the users, to the inflows, and you'll see that Hyperliquid is one of the only true competitors to, I'd say, the spot market. And obviously, it's dominating and perps too, for as a DEX app chain. So I think that'll continue to be the way in the future.
That upper boundary thing, I assume you guys saw this. Some really smart guy posted it, but this is like this is
Bro, 1.5 trillion. What the?
okay. So I want to clarify a few things here because I got kind of roasted for talking about this, like because talking about this with the rest of the team because they were like, "Bach, you're retarded." Like it's obviously not going to 1.5 trillion,
Which
and
is partially true.
Bro called us the bulls, bro.
and
Us the bulls.
I think
This is
it's going to
crazy.
1.5 trillion. But to our listeners who don't have their video on or who aren't looking at a screen, this is basically comparing Hyperliquid fees compared to other L1 and L2 fees, and basing their valuation off that. And the main gist of this was that like Hyperliquid's making a lot of money, and there's clearly like the team ships. There's gonna be growth. They're launching a whole new L1 to support the um, EVM, the Hyper EVM. So there's definitely like ways for it to grow in terms of valuation. And I think this is something that like kind of bugs people is so like typically we've seen dexes, like perps dexes, top off at like way lower valuation than Hyperliquid. Um, and that's because people think that the growth is done. And like liquidity moves elsewhere because perps volumes are very like dictated by points programs. But we've seen Hyperliquid actually continue to compete and even increase. I think like um, it's the only perps dex that has been able to compete with sexes. Like anything else, GMX, Grift. Not to say these are bad products, but they haven't been able to compete with sexes. While like it's not Hyperliquid isn't just a blip on the map. It's like actually taking up a small but decent percentage of OI and volumes.
Yeah. Yeah.
And what
Yeah, go ahead, Max.
I was just gonna say, I think there's, a kernel of truth to the table you made there, right? Because yes, your team is right. People aren't out there basing their valuation models for L1s on earnings multiples.
Yeah.
But right, in the hyperliquid context, the vast majority of those fees go to token buybacks on the open market at a every 10-minute type pace. um, when for almost every other L1 it's the opposite, right? Like the marginal flow is unlock, 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 vesting, right? Like, there's this barrage, right, of on the margin of supply hitting the market, whereas hyperliquid it's the reverse. And in a very momentum based asset class like digital assets, right? I do think that really has uh, a magnifying effect over prolonged periods of time. So I don't know, at least that's what I tell myself, right? Because obviously, macro conditions are what they are right now. Crypto's probably going to take a beating at the very least until the inauguration. But when we talk about like relative outperformance or underperformance within the asset class, I think it's just very hard to ignore what a multi-million dollar buyback every day, which is what the cadence is at the moment, right? You're not even like asking for an all-time high volume day to get that level of buyback hitting the market. Um, and so I think that is very relevant when comparing different L1s or networks or platforms, whatever phrase we want to use to not alienate anyone today.
Inverse BNB burn.
Right. It's actually open market supply, not just shaving off the FDV.
Inverse BNB burn is a good. That's a good tagline there.
I mean, it's so. I mean, yo, like honestly, whenever could you think of? I mean, again, this is not delusional, right? Like this is actually objective because, yeah, I'm ready for the S tier cope replies because I post many of them myself. But anyway, like whenever could you be so happy that an asset price is like lower in dollar value because of the dollar fees that they're collecting going back into turbo punting literally on repeat. If anybody's never seen the assistance fund address, go to hyperscan.io and type in assistance and then click assistance fund because it's already tagged. And just enjoy watching the transactions, honestly. But yeah, basically, whenever could you be so happy that the asset price was lower because you just lower the cost basis of the assistance fund? Uh, I personally can't remember. I try to think of this as a researcher, right? And like from an analytical perspective, as opposed to just delusional bulltard. But yeah, I mean, that's part of my mental framework, and quite a few others share that. But yeah, I mean, just something I think is not thought of often.
No, it's a fair point.
Yeah, and I think on top of that, like all of that is a great point, and maybe from time to time we see something like this with a protocol that is absolutely bleeding, fees and revenue and volume and users from when the incentive program ended, but that's clearly not the case with Hyperliquid. So it's not like you're just like you said, irrationally just throwing out this bullish propaganda. Like the metrics are still there to back it up on top of that, which is crucially important.
Yeah. Just to clarify, before I get like absolutely um, mogged, I
Flamed.
do not think that my valuation, my thing, the screenshot and the like 1.5 trillion was a joke. Um, was It was not serious. I just thought it was funny. Um, and also Hyperliquid posts do really really well on Twitter. The other the
Bro's
other
a growth
thing
hacker.
Um, yeah, I mean, Max, like you said, we don't really have this interaction with a team or with a protocol where the team is actively buying back the supply. But like typically, what we see is the inverse, where the team is actively selling um, at monthly unlocks. I think that this kind of throws people off. Typically, but it's all verifiable on chain, but it's kind of hard to explain that there's a multi like $1 billion bid per day just based off of fees. And perps are very, very good for fees because people are horrible traders. Like if you just look at the HLP, you can see that like people lose money and people keep closing and opening positions. They keep getting liquidated. So these things are money making machines. And then once you take whatever fees you earn and implement the permanent bid. Um, I mean, it hasn't worked very well over the past few days, but it's supposed to be a really, really, really good bid.
Yeah, indeed. In other words, yeah, I think the interesting point you made there is that it does throw people off, and this can actually carry over not just to the hype price, which is obviously the most relevant, I guess you could say, surface point, but even when looking at like spot markets, for example, like I get nauseated by continuing to post this, so I can only imagine when people actually read it, but the fact that there is only an available like just over 20 million as of right now, like as we speak, just over 20 million of USDC in bid side capital. Again, to be fair, like this is not factoring in individual liquidity providers, whether it's like retail retardio bidding at some price, like with their own USDC, or institution for that matter, buying any other asset. It could be it could be the shittiest of shitcoins, right? Just talking about HIP2, which is effectively you could think of like an AMM, right? Like for an easier mental model to compare. Like it's criminally low compared to like available liquidity on other ecosystems, and on top of it, there is this constant, again, casino chip effect that doesn't yet exist on Hyperliquid. And what I mean by this is that you cannot yet use your hype to directly purchase any spot tokens, right? Like this is still a ridiculous amount of like, I mean, I don't want to come off here as in give like totally no financial advice involved in saying this, but again, like just objectively looking at other ecosystems, right? You have every single ecosystem's native token, like the gas token, Sol for Solana, ETH for Ethereum, etc., as the base quote asset effectively against every token that's created. And on Hyperliquid, that flow is not there yet. There's a lot more friction involved. Like imagine, yes, there was a ton of wealth printed with hype, but the problem is people need to realize that wealth first before they go into any other spot token. And inversely for moving out of whatever other spot token into hype, right? Like they need to sell for USDC, which is already mentally like you've TP'd, right? And then take this otherwise precious USDC to traders, right? And then move it into some spot coin and then vice versa, right? So there's still a lot of friction, and everyone talks about like the greatest trades being, still having friction, et cetera, et cetera. Um, and then you still have people that have the gall to say that, like this is played out, et cetera, et cetera. So anyway, it's just very interesting and just, I would say unique takes that I haven't seen on potential mental models for Hyperliquid and its subsequent ecosystem and before Hyperliquid DeFi is a thing. So yeah, I hope that this helps for any listeners who are just taking in regurgitated information and can look at it from a different perspective. Obviously biased, but yeah.
I guess maybe let's do what has been said about Hyperliquid, the regurgitated stuff, and then maybe try and correct it and also kind of think about it. And the big one was Hyperliquid is an L3. I think like the actually probably good take on this is it depends on how you define an L3. Like if you think in the traditional way, it's not an L3 because it doesn't post state on on Arbitrum. Um, but if you're taking it from the context that it relies on Arbitrum, I think it's safe to say that it does to an extent. What do you guys think?
Yeah, this would make Solana an ETH L2, in my opinion, because there's wrapped ETH on Solana, right? Like it's a bit of the same thing. Yeah, like there's something to be said about the fact that there are not anywhere near as many validators on Hyperliquid. That it's controlled currently in terms of consensus by 14 validators, but there has been really really active steps in that direction, and I think that there's been a lot of cherry picking about like what currently exists as opposed to what will exist in the future, and a lot of discrediting to the steps that have been taken to accomplish that very very clear vision. Like people talk like this hasn't been stated. People talk like this hasn't been like this isn't a goal. Like it's horrible OPSEC, blah blah blah. When meanwhile, like there are multi-year roadmaps posted elsewhere, and these are factored into institutional theses for Ethereum, for example, right? Like, so like it just doesn't make sense. The hypocrisy is a little bit weird, but yeah, I just think it's important to realize that very soon, when other native spot assets are available on Hyperliquid, they do not become like Hyperliquid does not become a Bitcoin L2. It does not become an Ethereum L4 or a Solana L2, the chain extension, right? Like, so it's a little bit of a weird frame of mind, but I honestly, like, I will give credit to the point that you made actually, which is along the lines of it's subjective, right? Like, how do you look at an L3?
Yeah.
Is it currently anchored by Arbitrum USDC? Yes. Therefore, can you look at it as a point of failure? Absolutely. And I think there's merit to that. Yeah. But I'll stop there.
Yeah, I just think there's a ton of nuance in the discussion, and yeah, I mean, you can look at the technical aspects, but I mean, at the end of the day, like, I think the market valuation is generally what matters, and kind of while you were talking there, I just pulled up CoinGecko categories, and I had to scroll to page two, and the 117th category was L3s, and the top one is Degen with a valuation of 400 million, and to me, like, and then there's what, one, two, three others above 100 million, and then they fall to 50 million. So like, you can talk about the technical nuances all you want, but the market is valuing it very clearly as an L1, and so that's just how I'm going to treat it. I'm not going to be, the guy pointing in the mirror meme and just saying you're not wrong, the market is wrong. Like that's not
The
the way
shills are
that these
wrong.
markets operate. Yeah. So at the end of the day, like that's, generally what you want to rely on. And I think, just looking at the valuation, and I mean, Bach, like you said, you have that chart up there with that it should be a $1.5 trillion asset. But there's other valuation frameworks compared to the other L1s. And like, there's only so many metrics you can use, in crypto. Like we're still trying to figure it out a little bit. And Hyperliquid as an L1, like its metrics are, off the charts in comparison. So at the end of the day, like that's what I rely on for me. Like, if you want to get into the technical nuances of it, you can. But to me, like it's just, that's more of an academic type exercise versus a market exercise.
Fair take. Max, what do you think?
I mean, I would just say you're not convincing anyone otherwise. I think opinions are pretty strong on this. In my mind, it's just a weak L1, right? Like there is a validator set with a ton of caveats, but ultimately that's where the straight state transitions are occurring. And yeah, if Arbitrum went down, bridge stuff gets wonky, but for the period of that downturn, doesn't necessarily impact users, signing transactions on the HL side, unless those transactions are to withdraw or deposit, right? So yeah, I mean, it is what it is. I think testnet progress is pretty clear that this will be an irrelevant conversation in a couple of months' time, maybe sooner. Uh, but yeah, I think in general, right, like these conversations have been tough, especially for, I don't know, guys like me and Omnia who've, been advocating for Hyperliquid for a long time, and we do so in the dark, right? Like we're not getting special team access. We don't we don't know any secrets.
We don't talk with Jeff every week or monthly cadence, you know?
Exactly. And so, I do recognize that most of the criticisms against Hyperliquid are valid. The question just for me has always been, you know, are there steps being taken to remedy this? Is it actually, something that the team values? And lastly, are you getting compensated for the risk you're taking and taking trust and being willing to, accept some of these faults in the short run? So yeah, that's a very long-winded response to the original question, but I do think, some people take a binary approach to these definitions. I think you can take a bit of a spectrum approach in this case. It's very much on one side of the spectrum at the moment. I don't deny that. But, I do think it's a bit cheeky to, go the L3 route on the conversation.
Yeah, I agreed with that. For what it's worth, I think it's an L1 as well. But I do understand if you want to make the argument. But apart from that, I mean, Tolks, what you said makes a lot of sense. It's like at the end of the day, the market is pricing it as an L1, and Max, like you said, like you can take the risk that you believe that it will become what people have been criticizing it isn't yet, and then potentially do really well because you're willing to take that risk just by like seeing that the team has worked towards this goal, and the team has done stuff in the past that they've said that they will do. So you can put some of the trust in that and say, I think Jeff and the rest of the guys are going to deliver. Therefore, I'm punting. I think that's
I
a
mean,
fair way.
and you always have to recognize, right, for a lot of people, even certain milestones will never be enough, right? Like I'm sure there are people that don't think of Solana as an L1, right? Like everyone has different thresholds for some of these concepts and some of these terms. And again, right, like you can't please everyone. So yeah.
Yeah, I think we forget that for the majority of the bear before Solana did like a 5x in 3 months, people were calling it a database that was like run by
SQL
SPM.
Llama.
Yeah.
Yeah.
Um, so yeah, I don't know. I think some people don't like giving people chances, which is also fair because you have to be the one to take the risk. And if you don't want to take the risk, you're gonna find that there are reasons for you not to want to take that risk. So I think that makes sense. I guess maybe on the more positive. No, let's go negative again. What is your Hyperliquid bear thesis? How do you see it fail?
Oh, let's definitely do this. This is interesting. You want to go first, Matt?
Yeah, I mean, so I would say, I think on a technical front, you know, of course, there's going to be questions around just how decentralized this thing could ever become. In my mind, I think there's enough evidence from what I've seen from testnet, like, worst case scenario, is this a 30 validator system that acts like, the Swift of trading, for crypto going forward? Like, I think that's reasonable. Obviously, that's not the end state I would prefer, but I think all that is to say, like, I don't know if I'd rest any bear thesis at a technical level. Like, I do think it's a killer exchange application that is, superior to relying on a truly centralized single entity counterparty whom you give your assets to, right? And forego custody with. So putting that aside, I would say the only risk that really keeps me up at night from a, let's say, relative underperformance perspective, right? Like, if crypto goes to shit, presumably this also goes to shit. So I don't think it's worth spending too much time on that scenario. But we do have a pro crypto administration coming in the US. But I think what we're already seeing, right, is that it's going to be quite cronyist, right? You're seeing Elon be in favor of removing EV subsidies because that hurts his competitors more than it hurts Tesla. If you look at some of the, crypto related individuals coming into the admin, I think, well, let's put it that way, right? They don't have Hyperliquid exposure. And Hyperliquid is gunning for just about every incumbent platform, application, network in this space, right? So, I think if you, take a political view of technology and study the history of technology, there's very many instances of good tech or things that were publicly and popularly adopted kind of getting squashed by incumbents who had political power because it didn't, benefit them economically. So honestly, that's where the majority of my concern lies. I think if Hyperliquid can just continue to grow in a vacuum, let's say, like I think the technical execution will be good enough. I think the liquidity will just continue to compound, and it's a good user experience for both retail and institutions alike so far. It probably won't be a straight line, right? But I think it's something that can grow over time pretty reliably. But if there is, a strike from the heavens, that that would be kind of harder to overcome. And of course, that's where you can get into decentralization arguments and the haha, I told you so's, right? But I think timelines do matter on that front, and we'll see how far we can get before those types of concerns, manifest. So yeah, that's where I would hang my hat on for that question.
Yeah, sweet. I'll piggyback off that and maybe talk about some other points of failure that could result in formulating a bear thesis around Hyperliquid. Maybe to touch on what already exists, and then maybe to then go on to what will exist in the future and talk more on execution risk. Will be does HLP completely fail? Right, HLP is arguably one of the more popular parts about Hyperliquid and what makes it so compelling for so many people. The fact that you can basically take the trade against, trade against traders ultimately, and bet on them losing money effectively. I mean, this is not a new trade. Very much popularized by GLP last time around. There definitely is something different to HLP as opposed to GLP, where it's not a basket of assets. So this is a proprietary strategy that's obviously not disclosed. Some could argue that that is bearish for them, but again, it's similar to what Max has said, which is that for some people it's never going to be enough, as opposed to just knowing it's a good product and depositing and taking that risk. I mean, there is obviously risk in doing so. Another part is obviously the failure of the perps product itself. Like, if there is a competitor that happens to offer something superior, is there something out there right now? Not that we can think of, but again, be open to the reality that this is a possibility. As there was a possibility for the existing perp dexes and even current centralized exchanges before Hyperliquid arrived. We have to continue kind of taking this into account. So that's another thing. So execution on that front. EVM introduces, again, significant risk as well, which is will the execution of the EVM be up to par and enough to bring developers over? For example, like maybe something that it already is kind of showing, where I won't say there's cracks, but potential for developers to be a little bit put off by the fact that teams aren't willing to kingmake anyone. Like, you have to essentially take the available information that the team publicly puts out and then do what you will with that information effectively, right? It's extremely meritocratic, and the reality is there has been a lot of spoon feeding in crypto from the ecosystem level with regards to teams. Some of it obviously good, right? Like, that's not all bad, but the point being that the teams are not used to that at all when they come to Hyperliquid. They're expecting the team to kind of again, spoon feed them with all the information that teams need in order to do their thing. the EVM, I think, helps this quite a bit as well, and is a smart move from the team to not have to baby every single kind of project or willing team that is looking to deploy on Hyperliquid, particularly because there's going to be a lot of tooling that is already available from existing EVM ecosystems, and the fact that it's the more mature VM. So anyway, those are a couple of things in my mind that make it like that introduce risk and could kind of help serve a foundation if somebody was looking to create a bear thesis on Hyperliquid. Another thing to kind of throw on the tail end of that as well is if Hyperliquid DeFi doesn't take off, right? Like if the introduction of everything we know and love about DeFi, whether it's AMMs, liquid staking, yield trading products, you name it, right? Like if that doesn't do well on Hyperliquid, if that ecosystem doesn't, grow from budding to exploding, right? Like that could be a significant risk as well, right? Like there are other market participants that could invest a lot into that and effectively siphon teams from deploying on Hyperliquid and spending their energy on doing it there where they won't get the same treatment. So yeah, I mean, those are a couple of things that I think about as well, on top of obviously what Max has mentioned. And so hopefully this is a fair and objective take to everyone listening. But yeah, I think that pretty much covers it in terms of how I think about it. Yeah.
Fantastic. Tolks, do you have any you want to share?
No, I mean, not really too much to add on to those. I think that covered the main ground there. I mean, I guess you could always say there's, the tail risk of another Hyperliquid type that, like we talked about at the top of the show, like one of the bullish cases for Hyperliquid is that every other perp dex that has, ran something like this, and granted Hyperliquid has much more than just the perp dex, but any type of incentive program like this, like, we've seen the volume and metrics and users, generally it's right after the airdrop, it fades significantly, and we haven't seen that on Hyperliquid yet. So there's no reason to think that it will be the case. But from the kind of launches that Hyperliquid was, like we've seen this type of playbook. I mean, Hyperliquid is it different in many facets, but we've seen this kind of fade out before. And like I said, I don't think that is the base case or even likely at all. But that would be just kind of another tail risk, is that there is another perps platform that pops up, and some liquidity and incentives flow there. But then again, like you have the Hyper EVM launching in the spot market, and some of that should build a little bit of a moat. So, but yeah, I think everything else was covered pretty well.
Yeah, I'm gonna add. I agree with all you guys. Max, to add on to the regulation side, the politics / regulation side. We'll also say USDC, USDT, like native deployment is something that I think about. I know you're with Liquidity, and I love Bold. I had the guys on the pod, but perps traders do prefer USDT, USDC as their base asset. So that's one of my things. So I agree with you on that. Is like if there is some form of political motive or incentive, then that's something that kind of worries me. In general, getting spot assets onto Hyperliquid is my big thing, just to cut out that reliance to Arbitrum. But I think that should be pretty easy. I imagine there's a lot of money to be made on that for protocols and for custodians, or like I guess stablecoin protocols. So I imagine there's a lot of people working on it. And that's actually something I wanted to ask you guys, because Max, you're on the Angel Syndicate side. Omnia, you're building. And one of the concerns is attention, as in, will the Hyper EVM get enough attention from applications and from users? For the user side, I think we have to see. From the application side, maybe you guys can give a little bit of background on, I guess, like HyperActive and then Kinetiq, and also like what your experience has been like investing or building, and what like the ecosystem looks like right now. Like, is there a lot being built? Do you think the base like protocols that are necessary are being built? What do you think people need to focus on, et cetera, et cetera?
Sure. So on our end with Hyperactive, we've basically just been, a Hyperliquid power user club since August. And what we've done so far is we've incubated two projects, meaning, I got builders from my network to come together, set up new teams, set up new projects, and raise funding to build on Hyperliquid. And we've also invested in two other projects. And for disclosure's sake, Omnia and Kinetiq are one of those projects. And the focus with the teams that were incubated was just on what we expect pain points to be. So one was a liquid EV2 style stablecoin, right? That'll basically allow users to get a UX that is not coin margin, but at least unlocks borrowing that could filter its way back to perps trading, if they would like that. And then the other is a still in stealth project focused on dark pool execution, which is another fun topic everyone has opinions on. So I won't linger too long on it. But basically, the main takeaway here is that to Omnia's previous point, right? Like, there's not a lot of handholding in this ecosystem. Testnet is a battlefield at times. And so giving builders the additional support they need and at least make the fundraising side and the advising side like as frictionless as possible has been our goal with that. And what I would say is at the moment, a lot of the DeFi kind of core building blocks are of course like low hanging fruit, right? Like, there's multiple stablecoin projects, there's multiple lending markets. I think incumbent teams from other networks, a few of them have deployed on testnet, like Curve. And what's cool about Hyperliquid too, right, is that you have this whole kind of business model that works for interfaces as well. So, for those who aren't familiar, interfaces that submit either perp or spot transactions to the chain can attach small fees to doing so. And so, if you are a team that is able to get a lot of volume through the door with what you've built, you basically have very scalable liquidity and a matching engine backend, right? For lack of a better phrase, through Hyperliquid. And so we've definitely seen some cool successes there already, whether it's with the Hyper Fun Telegram bot or the PvP bot, also on Telegram, right? Like, both of these projects have been just throwing off fees with relatively small teams. So with all that said, I would say my current view on like the builder landscape for Hyperliquid and the Hyper EVM in particular is, I do think there will be growing pains. That's just going to be a fact, right? With something that's new like Hyperliquid, there is a lack of a grants program, right? So that already is a turnoff for some builders. And what I would say is the lack of open source execution client and just even a bit more detail around Hyper BFT itself. I've spoken with a lot of DeFi builders that are excited by the fact that Hyperliquid has chosen an EVM for its kind of smart contract sidecar, but there are concerns around what does MEV look like in this type of ecosystem, right? And what can we expect from the validator landscape on day one, right? Like, those are pretty existential questions, especially when you're dealing with people, right, who got into DeFi for ideological purposes more often than not. Like, it's definitely I would say there's definitely a friction, right, between like, do you want users and liquidity, and are you willing to make ideological concessions on that in the short run, right? Like, I think that's going to be a question a lot of builders ask themselves here over the coming quarters, and we'll see what the majority chooses. I think downstream for users, there will be enough that take the plunge. I think you'll be able to borrow and lend and do kind of some of the basic DeFi stuff necessary to unlock the type of activity you see on other L1s. So I'm not too worried about it at the moment, but I do think there's quality talent that doesn't make the jump because of that, and that's always disappointing. But it's the cards we've been dealt here in the community, and we'll see how progress gets made on topics like open sourcing and shining a light on some of this stuff here in the coming months.
Fantastic. Omnia, what do you think?
Yeah, the Hyperliquid team does also not pay for any integration. So, for example, like there was this, I think, I'm not sure if this was confirmed, but apparently Blast, for example, paid like $2 million for Etherscan to create BlastScan. And I'm sure countless other chains have paid ridiculous integration fees. And yeah, Hyperliquid does none of that. And they're very, very public about that fact as well. So, for example, like there have been ecosystem builders that we've seen, for example, try to make comments about this and try to pressure or bully the team into paying for such integrations, but so much so that people have even considered like crowdfunding among themselves, like for certain stuff like TradingView, for example, or Etherscan. But yeah, it's very interesting, and again a very unique dynamic, because now you kind of pit the pressure on the teams themselves to basically figure out whether it's worth making the jump without any sort of direct incentive or not. And like one example of why this has made sense and why it's extremely consistent with the Hyperliquid team. By the way, saying this now from a builder perspective, right, is even earlier in 2023, right, like first connecting with the Hyperliquid team, they, as in like literally just asking a question in Discord saying, hey, like, is there a DMM program or a designated market maker program, for example, for Hyperliquid? And yeah, the response has always been pretty much crystal clear. Like, I'm positive the team has like copy pasted responses somewhere, either on their machines or like in their offices somewhere, because like the responses are remarkably consistent and have been now for a very, very, very long time, not just like a quarter or two. So anyway, that's an interesting perspective I feel is good to bring up. But yeah, to chat more now on the hyperactive part as well, and second everything Max has actually said, because I'm part of hyperactive myself, and have co-invested in a couple of projects. So yeah, like it's very interesting to see the quality of builders increasing since the introduction of HyperEVM. And by the way, introduction meaning like announcement in April, May. It has certainly increased by quite a lot. Hyperliquid is going from a crossing chasm, as Max said earlier. Is going from a indie developer community to like a proper ecosystem of, honestly, like there's projects that are beginning to like reach out and follow like daily now, like, oh, building this AI agent, yeah, who could have guessed that? Or building some sort of launchpad, or building some sort of casino on Hyperliquid, or something, right? Like there's a number of things that are being developed now. Everything from like core DeFi kind of tooling, as Max had mentioned, like borrow lend, CDP stablecoins, obviously liquid staking as we're developing with Kinetiq, and we've seen a couple others offer or announce that they're going to be offering liquid staking services as well, and beyond that too, right? So the social trading element, obviously, like PvP, and Hyperpump by Hyperfund. So yeah, there's quite a lot to it, and I only expect this trend to accelerate. And we've been talking with quite a bit of teams that exist in very prominent ways on a bunch of other like grandfather chains, right? And are extremely excited about deploying on HyperEVM. So in a very short period of time, and by this I mean like within 90 days, teams have gone from, yeah, we'll evaluate, to, yeah, we just can't fade this, like it's not possible. So now it's being like baked into their GTM, and nobody's gonna get any direct financial benefit, as in like a grant of any kind. Like if anybody looks at like the hype distribution structure, there's only like 30 basis points of supply that are set aside for grants anyway. And I really can't even think of what that would be. That would probably be like the dashboards or explorers that people have built, but that's about it. Like that's community stuff that like people have invested significant amounts of blood, sweat, and tears, time, energy, and obviously capital resources into. So anyway, I mean, I think that's a good blanket statement of my thoughts on some of the things being built, and expecting this trend to really, really accelerate, especially post EVM, obviously, because people can actually do stuff. So yeah, that's a cool part. One thing that I'm a little blank to at the moment because there's no clear explanation of this. And I've been trying to think about it for quite some time. Actually, has been actually one of the parts of Hyperliquid that most excite me. Funny enough, so it's something I'm questioning the most in a good way, and then also one of the parts that excites me the most. So the native token gas auction system, like on the L1, if you will, like the trading environment where you can effectively like compete with anybody for the right to launch a token, right? Like precious token space or ticker space, whatever you want to call it. That is very interesting. And I don't know how this applies to the EVM. Like on the EVM, will people just be able to mint infinite tokens a la Solana and ETH, or will they have to follow the same path where to mint a token on the EVM side, you'll have to win the TGA, and like I don't see that making sense for long-term growth. So yeah, just a thought.
No, I agree with you. I don't think it makes sense in the long term. We'll see. That's something that I was actually thinking about as well. But I imagine, so one thing that's semi-confusing to me, and I think I might just try and beg Jeff to come on the podcast again, but I imagine he's too busy shipping.
Yeah.
But one thing that doesn't make a lot of sense to me is how the L1, the order book L1, and how the EVM L1 is going, how they're gonna work together.
Yeah.
I need to chat to him about that. MEV side is another question. That's something that I find interesting. Max, you brought that up, but I think that's probably a good place to end it. Tolks, do you have anything else you want to add?
No, not really. I mean, I think it was great. There's a lot of exciting things to look forward to in the Hyperliquid ecosystem, and I'd definitely be tuned in for that. And I appreciate all your guys' work in building out the ecosystem and continuing to do so. It's much appreciated, and there's a lot to be excited about.
Yeah, that's perfect. Very political, very American. I love that. Max, Omnia, thank you guys for coming on.
Yeah,
This was
thank
a
you
blast.
guys. Appreciate you. It's been really fun. And we'll definitely have to run it back at some point
Yep,
with various updates, I'm sure, by that time.
I hope so. Maybe when they do the 5 million validators, we can again.
Maybe when it upgrades from L3 to L whatever, right?